5 mistakes you need to avoid after you get pre-approved for a mortgage. But before we get to all that, if you are interested in buying or selling a home, especially here in the Houston area, but anywhere else is good too, make sure you go ahead and subscribe, and you'll get all the videos that I put out, multiple videos weekly, helping you along on your real estate journey. Okay, now that we're past all that, let's get back to the 5 things that you need to make sure you don't do after you get pre-approved for a mortgage. So make sure that you stick around for all 5. Remember, when you get pre-approved for a mortgage, a lender has looked through a lot of your financial information. They're looking to get a big picture and a clear and whole picture of your financial situation. So if you change things after you get pre-approved for a mortgage, that can throw a huge wrench into what you're trying to do. True story. You know, I'm in a lot of realtor groups, and in one of these groups, one of the realtors came in and said, "How do you sell a tractor?" One of her clients had been pre-approved for a mortgage, and then in a rural area had gone and bought like a $20,000 tractor, and that client no longer qualified for the mortgage they had been pre-approved for. Those are the kinds of things that you got to make sure you don't do. Even if you're not planning on buying a tractor, one of these other ones may apply to you. Because like we said, we're trying to get a full picture, or the lender is trying to get a full picture of your financial situation to make sure that it is safe to lend you money. So, mistake number 1, don't change banks. You don't want to open any new bank accounts or switch banks after you've been pre-approved for a mortgage. This can throw just a huge speed bump or hurdle into your home buying journey, because that is a huge change to make in your financial situation. And remember, we don't want to change anything. You should be the most boring person ever between the time that you get pre-approved for a mortgage and you close on your home. 2 days after you close on your home, any of these are fine. But do not switch bank accounts between getting pre-approved for a mortgage and closing on your home. Mistake number 2, don't open another credit card. Just don't. Remember, the lender is looking at your credit to see if you are able to pay back all of the things that you borrow, right? A lender is lending you money that you're going to borrow and pay back. When you open a new credit account, it makes them wonder why. Are you planning on a big purchase that you can't afford? Are you hiding other things? You don't want to do anything that's going to change your financial picture, and that includes opening a credit card. That changes your debt to income ratio, and that changes your credit utilization ratio, and you don't want to do those things, okay? So 1, don't change bank accounts. 2, do not open any credit cards or any other kind of credit accounts. 3, don't make any large purchases. I already mentioned the tractor. I don't know if a tractor was in your future, but maybe you've got like a 12-year-old car and it's, on its last leg, and you see a great deal on a brand new F-150. Don't get it. Would you rather have the F-150, or would you rather have a mortgage to buy your house? Okay, do not, again, the repeated theme of this video is going to be, do not change your financial situation in any way. Number 3 is don't make large purchases. No cars, no furniture, no, layaway accounts at Best Buy, nothing. For the 2 to 6 months that it takes to go through this home buying process, do not make any large purchases. Mistake number 4 you need to avoid, don't deposit any large amounts of cash. That is going to freak your lender out, okay? So, maybe you have a side business and you restore cars on the weekend and you got paid, you had a car, you restored it, and you sold it for $30,000 cash. Good for you. Don't deposit it until after you buy your house, okay? Again, going back to, lenders want to make sure they have a full financial picture of what's going on. And so if there's this $30,000 of cash that arrives that they have no idea where it's from, that's going to be a problem. Another thing that sometimes happens is parents, in-laws, somebody in your family may gift you money for a down payment. Your lender needs to know that that's coming, and you need to talk to your lender about how to handle that. Okay, so even if someone is just being generous and giving you a little bit of a gift to help you out with your home purchase, they're excited for you, that is fantastic, and you certainly should be able to use that money, but do not deposit it before you talk to your lender. Basically, you don't want to surprise your lender in any way, and that includes with getting more money than they're anticipating you having. And then mistake number 5 to avoid, this is a big one. do not co-sign a loan for anyone else, okay? Maybe you have like a college age sister and her car broke down and she needs a new one, but she can't get the loan on her own, so she asks you to co-sign it with her. I get that you love your sister, but this could prevent you from buying a house, because what happens if you co-sign the loan with your sister and you know she would never do this, but she misses a payment? Now you have a brand new late payment and a brand new credit liability on your credit because you co-signed a loan. Again, all of these are wrapped around not changing your financial picture in any way between getting pre-approved for a loan and closing on a home. No surprises, no changes. Plain vanilla, as boring as you can be, and then 2 days after you close on your home, if you want to install a pool or you want to buy a tractor or you need to co-sign on a loan for your sister's car, that's on you, right? You get to decide, and you get to figure out how you want to run your life. But in this time between getting pre-approved for a mortgage and closing on your home, the lender is the one who really is going to get to decide what you're doing with your financial picture, and you want to give them the best, cleanest, most boring file ever, okay? So I'm not saying these are all bad things to do. A lot of them are fine things to do, just not during those few months that you are pre-approved for a mortgage and looking for a home. No surprises for your lender. If anything like this is gonna come up, if you can see it coming, if, like I said, especially, sometimes those cash deposits from family members giving you a gift to help you with a down payment on your home, talk to your lender before you do anything. They're gonna be the ones that are gonna help you walk through this process, because when you get pre-approved for a loan, that's not an approval, right? That's a pre-approval. They're saying this should be fine. And then after you put an offer in on the home, you get an inspection, you get an appraisal. The process after that is called underwriting, and there are super nerds that we love in the underwriting process, that they are again combing through all your financials again to make sure they haven't missed anything and to make sure this is a safe loan for the lender to make. So do not give them any reason to think that this is not a safe loan for them to make, okay? That's what it boils down to. Boring and safe. That is what we want our financials to be, so that our lender feels like this file is boring and safe, and they can confidently lend you money to buy your home. So those are the 5 mistakes. I hope something really good happens to you today.